Hey everyone, one of the coaches of Unger Academy here, and welcome back to our usual chat that we have on the weekends about the market trends. But before we start, as always, please subscribe to our channel if you haven't already done so, in order to stay updated on the release of all our new videos. And hey, remember to leave us a like to this video as well. Thanks so much.
Hi, we are the Unger Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unger, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks.
Okay, so another roller coaster week for the markets. Obviously, this depends on the current situation, namely the ongoing conflict between Ukraine and Russia. Now, in this chart, you can see the trend that wheat has had during the last days, with several limit ups and subsequent downs in the last 4 to 5 days. Obviously, in a situation like this, it is easy to see that volatility is at an all-time high. Our volatility indicators show very high volatility percentiles, both in the short and in the long term. And not only on equity indexes, but also on bonds, on commodities, on energy markets in particular, and also on metals, and especially on wheat and corn. But let's go in order. Let's start with the stock indexes. And immediately we see that the European indexes have gained much more than the American indexes, which are currently at negative levels. Obviously, this is because they had lost much more before. At present, there are some distant glimmers of a ceasefire, and therefore this is enough to at least partially reassure the markets. Certainly, the greatest loss suffered by European indexes in the previous weeks is due to the proximity of the place of conflict. On the other hand, as far as the bond market is concerned, we see heavily negative returns, in particular on the T-bond and the Bund. T-bond that had obviously rebounded at the same time as the conflict broke out, and on the Bund, which is currently plunging, let's say. But why? Well, because the rise in commodity prices in recent months, combined with the recent bad inflation figures, obviously raise fears about a future rate hike. And this is despite the energy market being down this week. We are seeing negative returns on all oil derivatives and also natural gas. Here's the chart of the heating oil, and here's crude oil, which are rebounding from the extremes that we saw this week. This does not detract from the fact that in recent months these commodities have really grown a lot. I mean, heating oil, for example, at 1 year has a yield of 96%. 80% for crude oil, gas, and so, this certainly fuels fears about inflation and rising rates. The metals market has been less affected. We've got copper, which lost 6%. However, if we look at the intra-week, we see important fluctuations, important swings on these commodities. There was little movement in the meat market, and so I'd say even in soft commodities, with the sole exception of orange juice. On the other hand, as far as the agricultural grain market is concerned, it's certainly worth noting that wheat, which we saw at the beginning of the video, is fortunately currently losing 11% on a weekly basis. As for the currencies, we've again seen major fluctuations this week. We've seen a euro dollar go as high as 1.08, and currently is around 1.10. Bitcoin, all in all, hasn't moved that much. As you can see, we're always within the usual trading range. So on the cryptocurrency side, there isn't much to say. Let's also take a look at the term structure of implied volatility. We're in backwardation, or almost, since not all maturities show a backwardation. We've got a VIX value around 30, so it's still high values. This kind of term structure, in which volatility can be seen to have increased over the last few months, obviously leads to some fear about the future direction of the markets. Moreover, because we know that when there are conflicts, such as wars, caution obviously has to come first. This obviously does not mean abandoning or suspending trading completely, but at least a reduction of the typical trade size would be a wise thing to do. Also because with such a volatility, it's sufficient to have a smaller number of futures to obtain the same results that would be obtained in normal market phases. Think about what would have happened in the unfortunate event that you had short positions on a market like wheat, which had been in limit up for several consecutive days, and so wouldn't have given any possibility to exit the trades even through stop loss. So first and foremost, please be very careful. Now let's move on to the rollover calendar. Next week will be the Three Witches Day, so the technical expiration of futures, index options, stock options. Today we rolled over the US index futures, while European futures still need to be rolled over. Finally, it will be possible to roll over crude oil on March 17th. And hey, finally, if there is someone among you who wants to learn more about systematic trading, we'll leave you a link in the description of this video. There you can watch a free presentation of our founder, Andrea Unger, who will introduce you to this world with particular focus on his method, the Unger method, which led him win the World Cup Trading Championships 4 times. And you can also get covering only the shipping costs, his bestseller, the Unger method, and much more. Well, we really do hope that you found this video helpful. Please leave us a like if you enjoyed this video and subscribe to our channel. Click on the bell to stay updated on the release of all our new videos too. And with that, we'll see you next week. Bye-bye.